So the amazing run-up that we've seen in many different cryptocurrencies, but namely Bitcoin, over the last few months, has been on hopes of a Trump administration that is more lenient when it comes to regulations. So that's the hope. Now the administration has to deliver. What do you want to see?
Yeah, you're absolutely right. You know, we even saw it yesterday with Trump at the New York Stock Exchange. He mentioned that he wants the United States to be the #1 leader in cryptocurrency in the world. That's a very different narrative than what we've seen in the last 4 years. We've also seen the Trump administration anchor on this 150K Bitcoin price. And so we've seen, markets respond to that. We've seen a lot of option call buyers with March 2025 expiries. And so really a lot of people, as you mentioned, are kind of basing their expectation on a much more favorable administration. Now, that can be in many subsets. We see Paul Atkins coming in as the SEC chairman and commissioner, and that is going to be very positive for crypto companies that are centralized. We still need to see what that means for decentralized finance as well, especially as it pertains to KYC and sanctions. But overall, it really does mean that the narrative is front and center, and you're seeing that momentum in ETF inflows.
Does it seem like it could become the Wild West to you?
We're very much hoping that we're actually going to get very clear guidelines. And I think that's one of the main pieces of also having a role within the White House that is focused on crypto. You have David Sachs, who's going to be spearheading a lot of that. And what we're actually looking to get from that, he's invested in a bunch of these companies, is actually rules and regulations on what we need to do.
Do you see that as a conflict of interest, that he's invested in a lot of these companies, but he's going to help advise the president and at least people in the White House on making rules around these?
I think you could probably say that about, a couple people that, are advising in the administration. But that said, you still need to have all of this get approved by Congress. You need to have it approved also on a state level. And so you're seeing a lot of states actually start to jumpstart this. And so you're seeing states such as Texas, most recently this week, say that they want to have Bitcoin as a reserve currency for the state. The U.S. has spoken about it. You're seeing a number of states now, 4, actually say that they're going to go ahead and do that. And so I think you'll see a lot of the checks and balances on both a state and federal level, and we're excited to see that play out.
Andreessen Horowitz's crypto policy lead, Brian Quintez, is a top contender to lead the CFTC under President-elect Trump. What kind of role do you see that he would play in shaping crypto policy?
He's been pretty favorable in both what he said very publicly and also in the guidance that he's given for a lot of the A16Z companies. For example, Uniswap is one of the largest ones. That's a decentralized exchange platform. It touches a number of users. And I think what you'll see is that a lot of these currencies will fall under the CFTC. CFTC has given very clear guidelines, and so we're very excited to continue to push in partnership with them.
Are you concerned that there could be clear winners and losers here, given that there are people from certain venture capital firms who have the president-elect's ear? Elon Musk has the president-elect's ear, but not everybody is going to have his ear. Are there going to be clear winners and losers as a result of who has access?
That's a very, very good question. And I think it still boils down to what are the guidelines and rules. So if you do pick, call it a clear winner based on someone's, relationship with a specific company or their previous investments, it really depends on why. Is it a commodity? Is it a security? And then boiling that down, and then we can take that guideline and apply that to many other winners as well.
Aya, what happens if there is some sort of meltdown akin to what we saw at FTX 2 years ago in the coming years, and you see a large number of people who have holdings of cryptocurrencies get burned? Maybe it's the result of a more lax regulatory environment. The whole idea with regulations is these are supposed to be guardrails and protect consumers. Does this whole thing backfire if consumers get burned?
So my personal opinion, and I think that of the industry, is that a lot of the things that happened with FTX were personal people issues and people management issues and lack of operational back-end systems in order that you see both in traditional finance but also in centralized exchanges.
That may be true, but it didn't happen in a vacuum. We saw the failure of a lot of crypto firms during that time, and we saw the real depression of many crypto asset prices.
I 100% agree. We also saw that in traditional finance with Archegos, for example, and that took down Credit Suisse. So it's not unique to crypto. These are still financial companies, and they still require very clear guidelines on operations, on people management, and on flow funds. And I think what we're going to get from this administration is exactly what that needs to look like in the United States. We can copy paste that into these companies, and then we can, with that clear guideline, that's the issue. Since we don't have the clear guidelines, we don't really know how and where to operate, and that creates more confusion. even with less regulation, as long as the guidelines are very clear, we can operate within those, hire the right people, whether it's for compliance or, again, back in operations, and continue forward.
What are you seeing on the August platform right now? Like, what's the activity that you see that you can tell us about?
Yes, our volumes have really spiked tremendously. It's very, very exciting. Yields are spiking. And so we're seeing, for example, our clients get yields over 5% on Bitcoin and majors. On basis right now, we're seeing roughly 11% for majors, over 25% for some altcoins. And then even for example, lending rates for stable coins, the 7-day average is around 16%. So it's really attracting more capital on chain, and we're excited to continue to see that.